Okay, students, I'm going to solve one question that comprises of expenses, income, prepaid expenses, outstanding expenses, accrued income, and income received in advance. So, before I solve the question, I would like to show you the format for accounting equation. The first one, you have to have serial number. Transactions, you have to copy the question. Then in accounting equation, your equation should be always assets is equal to liability plus owner's equity. When you add liability and owner's equity, you should get assets. So this is the format that you have to follow. Now let us go to the question. Record the following transaction in accounting equation. So transaction number 1. Dole commenced business with capital of Niltram 50,000. See, Mr. Dole has started business with cash 5 lakhs. So from this transaction, we identify two resources. First one is cash. So cash is asset, and second one is person who brings capital in the business is known as owner's equity. So we identify two resources. This transaction I'm going to put in accounting equation. First, you have to write number 1. You have to copy what's there in question. So you just write Dole commenced business. He commenced business with cash 5 lakhs. So here first cash is asset. He started business with 5 lakhs. We don't have any liability. This cash brought in by Dole is always known as capital. So capital also we have 5 lakhs. Now see, asset is 5 lakhs. Here owner's equity is also 5 lakhs. So asset should be always equal to liabilities plus owner's equity. Now we'll move to transaction number 2. Transaction number 2, it says, after starting the business, Dole, he purchased printer for 50,000. See, he brought money 5 lakhs into the business. After that, from this money, he is buying printer for his business. Okay, now I'm going to put this in accounting equation. So you have to write number 2 brought printer. See, brought printer. Here printer is asset for the business. No, when Dole buys printer for the business, he uses the money from the business. Okay, so here you have to write, before you write the resources of transaction number 2, always remember you have to bring the resources of transaction number 1. So you will write here cash. You have 5 lakhs in the business. So from 5 lakhs you brought printer worth of 50,000. So here cash it reduces. By how much? By 50,000. So how you will calculate? 5 lakhs minus the cost for the printer, 50,000. So now your cash will become only 4 lakhs 50,000. But in addition, you get another asset, that is printer worth of 50,000. You add this to, we don't have liability, capital will be again 5 lakhs. As I told you that asset is always equal to liability plus owner's equity. I hope you understood. Now we'll move to transaction number 3. We'll see the question. Purchase goods from Kinzang for Niltram 25,000 on credit. Say, purchase goods from Kinzang. You don't have to do anything with this kinzang. Remember, you are purchasing goods worth of 25,000 but on credit. So you are buying goods on credit. Later you have to pay money. Okay, so this, when you see the word on credit, it is always trade payable. Okay, you are not using the business cash right now, but you bought goods on credit. So what you can do is, so transaction number 3, it says purchased goods on credit. See, you are purchasing goods on credit. Goods is coming into your business. All right, so one of the asset you have in the business is goods, but don't forget to include what is there in the above transaction. So we have here cash. Your cash will remain same, so it is 4,50,000. Nothing is said about the printer. You should write printer. The amount is again same. Now see, purchase goods. Goods is coming into the business, no? So goods is otherwise known as inventories. Now you have goods worth of 25,000. You did not use cash to buy these goods. Why? Because you bought on credit. So whenever you buy goods on credit, it gives rise to trade payable. So you bought goods worth of 25,000. Now say, I told you assets is always equal to liabilities plus owner's equity. So now how to calculate capital? Capital is equal to assets minus liability. Okay, so you add 4,50,000 plus 50,000 plus 25,000. It is 25,000. So it gives you 5,25,000. Trade payable, you have to pay one day. No, this is credit. Okay, so you have to minus this trade payable. So minus 25,000. Your capital will be 5 lakhs. Whenever you buy goods on credit, you did not pay the cash, so that is trade payable. So whenever you have trade payable, you have to always minus from this asset, then only you will get the capital. Now we'll move to transaction number 4. Now transaction number 4, paid salary. You are paying salary to the staff in the business. Okay, so whenever you pay salary, always remember you use cash of the business. At the same time, when you pay salary from the business, your owner's equity will decrease. All right, so we'll put in the accounting equation. यही type गर्नु भनेको. Transaction number 4 says paid salary. So you have to copy the transaction. Paid salary. How you pay salary from the cash. So don't forget to bring what is there in the above transaction. In transaction number 3, you have 3 assets. Cash, printer, inventories. So first you have to bring the first one. So cash, you have 4,50,000 in hand. But from there, you paid salary as 5,000. Now what is the remaining cash you have? 4,50,000 minus 5,000. Now you have only 4,45,000 in hand. Nothing is said about the printer. You have to write as it is. 50,000. Inventories also nothing is said. You have to write the same amount, 25,000. Trade payable, it will continue to be the same amount because nothing is being said. So trade payable, it is 25,000. Now say, capital, you had 5 lakhs, no? Minus, you are using this capital to pay money, no? So how, to pay salary. So you paid 5,000. You paid 5,000 as salary, no? So now you will have, see, 5 lakhs minus 5,000. you will have 4,95,000. Now we'll cross check, okay, whether assets is equal to liability plus owner's equity. First, we'll just see what is there in the cash. So 4,45,000 plus 50,000 plus 25,000. It is 5,20,000. Now we'll just see what is there in liability and owner's equity. 495 plus 25,000. So again, in liability and owner's equity, you have 5,20,000. So this is how your accounting equation should be. Now we'll move to transaction number 5. Transaction number 5. See, sold to Penjo on credit. I'll just tell you the difference between transaction number 3 and 5, okay? In transaction number 3, you purchase goods on credit, no? In transaction number 5, you sold goods on credit. There is difference. In transaction number 3, you have to pay to Kinsang. In transaction number 5, you have to get money from Penjo, but he took goods on credit. So whenever you sell goods on credit, it gives rise to trade receivables. So trade receivables is always asset, but when you purchase goods on credit, that is trade payable and it is always liabilities. Alright, so I'll now teach you how to put this in accounting equation. Transaction number 5, sold goods on credit. Whenever you sell goods on credit, till now you did not get money, no? So cash will remain as it is. You'll get later. Printer, nothing is being set, so write the same amount. Inventories, now see, inventories is otherwise known as goods. You are selling goods. So out of this 25,000, what's the amount of goods that you are selling? You are selling 5,000 worth of goods now. From 25,000, 5,000 goods is gone. You have only 20,000 goods remaining. I told you whenever you sell goods on credit, it gives rise to trade receivable. It is otherwise known as account receivable. You need to get money from Penjo and you will get it soon. How much you need to get money? You need to get 5,000 from Penjo. I hope you are understanding why I'm writing account receivable. Why? Because you sold goods on credit. You should get money soon, okay? Since he bought goods on credit, that will give rise to the account receivable. Trade payable, nothing is being set, so you will continue writing the same amount, 25,000. So capital, how you're going to find? First add all the assets. 4,45,000 plus you have printer worth of 50,000 plus you have 20 worth of inventories plus 5,000. It is 5,20,000 minus you have, why you are subtracting this amount? Because you need to pay, that's why you have to minus 25,000. So your capital will remain as it is. So it is 4,95,000.